International markets are moving in a big way, with the Japanese Nikkei experiencing its biggest one-day crash on record, while the yen is up like a rocket. If you're a globally focused Japanese corporation like Nintendo, these are interesting times indeed. So how does all this change things for Nintendo? What are the risks and opportunities? Is this all as forecast, or are we booting up a whole new save state when it comes to Nintendo's prospects and the prospects for the Switch successor console? Now, I did say I was going to move on from financial videos, but this one is not about Nintendo's own financial statements, which I thoroughly covered over the last few days. This is about Nintendo's exposure to broader financial trends in the Japanese market, to a large degree in the international markets, and also where Nintendo finds its equilibrium within that global context. Let's get into it. So first of all, anyone keeping an eye on the news has probably seen that there is currently quite a bit of market turbulence, often assigned to fears of a US economic slowdown and the possibility of contagion into other markets. As with anything like this, many different factors come into play. Tech stocks are always volatile at the best of times, but concerns about whether AI's capacity to deliver outsized returns in the short term could have been exaggerated have probably played a part. Plus, there have been long-term concerns about a fairly major correction, with Warren Buffett, for example, advising that the market is resembling previous bubbles. Now, markets do go up and down, and some of the corrections prove consequential, and some are just blips, but it should be noted that Asia is in a quite different position from the West as a whole. It is not just the Japanese Nikkei. South Korea's Kospi index was down 8.8%, while Taiwan's TAIEX index was down 8.4%. Taiwan is home to the hugely important Taiwan Semiconductor Manufacturing Company, TSMC, which provides semiconductors to many corporations, including, of course, Nintendo. I'm not sure how long this drop will continue, given that TSMC's earnings and revenue outlook seems to be quite strong, and it seems to be part of an industry-wide correction rather than something specific to the company. Nvidia has also dropped following a 3-month delay to its Blackwell graphical processing units because of apparently unexpected design flaws. Long-term, Taiwan remains incredibly exposed to geopolitical tensions in the South China Sea, but that does not appear to be a major factor in the current market turbulence. So let's start to get to Japan specifically, and then to Nintendo's placement within the Japanese economic environment. The Nikkei has dropped while the Japanese yen is rocketing upwards. Long-term viewers of this channel will know that a correction like this is not unexpected. Japan has benefited hugely over recent months from a very weak yen. While that makes certain things tricky, companies like Nintendo, which make roughly 80% of their revenue from foreign trade, stand to do very well indeed. A weak yen means that they can offer their products at a lower price, or else keep the price stable and rake in the profits when foreign purchases are converted back to yen. Nintendo's financial reports always state that currency risk is their number one concern, and it was a lesser reported confounding factor around the launch of the Wii U. Clearly, companies have many tools to manage this. Nintendo has branches worldwide and deals in many different currencies. They also have some very big banks as investors. In fact, there's an early access video on my Patreon right now which deep dives a controversy caused in part by the UFJ Bank's alleged involvement with both Nintendo and Bandai some years ago. We know from Nintendo's briefings that the company is in regular correspondence with investors with a view towards the success of the next system. Today, though, the Japanese economy has many fundamental issues. Low to no inflation has been a problem that has dogged Japan for years. While inflation in the West is usually a negative and something to be guarded against, deflation is also a risk, as it encourages people not to invest and to spend, as there will always be better value to be gained from waiting. The lack of inflation, therefore, has largely correlated with a no-growth or low-growth environment over decades, and the Bank of Japan has come up with all sorts of initiatives over the years to try to get inflation onto its 2% target. 2% is kind of the Goldilocks figure. just enough to encourage people to spend and invest, but not so much that it triggers a cost of living crisis. The hope is that this will trigger a virtuous circle and rouse Japan from its long economic slump. There have been indicators that this is in train. Tokyo Metro subway fares have gone up 10 yen, which is about 7 US cents. Doesn't sound so massive, but it's the first price increase in 28 years. Food, beverages, even toilet paper prices have also risen by about 10%, and of course companies have been pressured by the government to increase wages. In February 2023, Nintendo announced their plans to raise salaries by 10% for new and existing employees. And while this did show Nintendo in a good light against Western competition, it was also just being realistic that in an environment where many companies are hiking wages, they needed to keep up to maintain and increase their highly specialized and valuable talent pool. Of course, with inflation comes the need to increase interest rates, especially given their large elderly population who rely on interest rate increases to protect their savings against inflationary effects. But there are more factors that affect cost of living. Last week, the Bank of Japan increased its interest rate again, a move that would inevitably lead to a strengthening of the yen. While the weakening yen has been absolutely amazing for Japanese firms trading abroad, it does mean that imported goods are more expensive, and the yen's progressive weakening against the US dollar over the course of 2024 has not helped matters one bit. While Japan has many strengths, it has a high population density and relies heavily on imported food and oil in particular. I covered months ago the long-term aspiration and expectation of a rebound in the yen by the end of 2024, and yet in the intervening months the currency has continued to slide against the dollar and many other international currencies. Until now, that is. There may be many contributing factors to the decline of the Nikkei, including concerns about bubbles, worries about technological slowdowns, and anxiety about the performance of America long term. But the reliance of Japanese corporations on a favourable currency environment to support their bottom line has to be one particular factor exacerbating the significant drop-off in Japanese stocks that we are seeing right now. And Nintendo is not immune from this. Its stock is down 20% over the last few days as well, and that's not a surprise when you consider the fundamentals of the company. As I covered in previous videos, Nintendo has an extraordinarily difficult task. They have to manufacture a console which will be more expensive than ever before in potentially huge bulk, and to ship it into international markets, launching potentially against a recessionary backdrop when people will be cautious about splashing out on expensive new tech gadgets. The fundamentals do not look amazing, but it could be so much worse. If they timed it wrong, they could find that the weak Japanese yen means they're disadvantaged when they manufacture the machine, because most manufacturing takes place outside of Japan. Manufacture now takes place mostly in Vietnam, but they source precious metals from all across the world, are still reliant on Taiwan's TSMC as far as we know, and likely will have many other local distribution and manufacturing deals for all the different parts they're looking to put together. But if the yen corrected at the wrong time and strengthened, just as Nintendo come to sell their system, not only could they have been disadvantaged when manufacturing the product, they could also see far less in profits and revenue as denominated in yen from selling their systems internationally. Basically, they'd be manufacturing with a weak yen and therefore paying more, but selling that system with a strong yen and therefore earning less. My hypothesis back in March was that this was one major reason for Nintendo to want to delay their next system, despite the fact that at the time the yen was weak and Nintendo could have made absolutely loads of money if they were able to put their console into the market quickly. And yes, of course, there are many instruments that a company like Nintendo can use to hedge against currency risk, and yes, of course, they will be employing those instruments and taking a lot of financial advice. But as I have set out, manufacturing a console like this involves absolutely mammoth outlays and a long delay before that expenditure can be recouped in the form of sales, because you need to have a large amount of stock at launch. In fact, in the May Nintendo Investors Q&A, Shuntaro Furukawa explicitly committed to a large volume of stock at launch. So concerned were they by the threat of scalping. You don't want to have a massive advertising push for a console that nobody can actually buy, because there's a very real risk that people then opt out of the purchase, lose their excitement, or decide to put that excitement to play video games into settling for a competitor product instead. But if the next console costs potentially $300 or more to manufacture, and they aspire to sell 10 million units in the first, say, 6 months, that means a $3 billion spending commitment. Manufacture would need to begin at minimum 4 to 6 months ahead of time, possibly more if they want to have a secure supply of stock. And there would be other upfront costs around launching a console in terms of marketing. However good Nintendo's instruments are to hedge against currency risk, there is no hedge as good as not timing your console launch against a massive correction in the international exchange rates. Well, we will see in the coming days whether the yen continues to shoot up or whether this all proves to be a storm in a teacup. But just imagine if Nintendo were gearing up to launch the Switch successor in September to November of this year, as many people had anticipated as recently as January of this year. They would have been ramping up spending since about March to May, so we'd be 3 to 5 months into a huge 6-month rolling spending commitment, literally billions of US dollars committed, and they'd be 1 to 4 months out from being able to sell a single console. They probably wouldn't even have had as strong a year as they've had this year. Sales of Switch games, already relatively anemic with the Switch successor still a distant prospect, would have been suppressed even more, as a lot of people would have decided to wait and save for the new console, so they would not even have benefited to the same extent from the weak yen when international customers were purchasing games in 2024 so far. And if they had been in this situation, and if the yen continues to strengthen, by the time they would come to sell their console, the margins they would stand to gain would be significantly lower. This is the trap they avoided. All things considered, watchful waiting has panned out very well for them. As of December 2023, they had a huge cash reserve, no debts, and they've had time to prepare their console to launch when the time is right. By the time this video goes out, the yen could well be at its strongest point for a year, and if the currency continues and finds a new equilibrium, perhaps now the time could be ripe to start Switch 2 production. For more Nintendo analysis, research and forecasts, please make sure you're subscribed to the channel, check out the Patreon for more cool stuff, and otherwise I will see you again soon for another Nintendo forecast.